Excellent. So the recording for this tax processes for business revision session is now underway. In tonight's session, we're going to be taking a look at tasks 1, 2, and 3 respectively. So let's start at the beginning, shall we? We're going to start with task 1, which is quite nice, to be honest with you. When we're looking at this, we're looking at understanding and calculating tax laws and different principles relating to VAT. Good morning, afternoon, I beg your pardon, Mahmouda. Hope you're doing well. Now, of course, in your assessment, you will have access to the reference material. That is your best friend, okay? You will be, I'm sure you've seen at this point, amazed at how much of this exam can be picked from the reference material, okay? It's your best friend in the exam. Use it, okay? There's lots of rules, allowances that respectfully, you just couldn't remember them all. Use the reference material. So again, there'll be certain things, as we're going through, I will pick and choose what is located where, but I'd also encourage you to have a look through it yourself and familiarize yourself, okay? So for example, things like registration thresholds, deregistration amounts, different types of schemes, all of these are listed in that reference material. Now, this task is actually only worth 9 marks. It gives you about 10 minutes to complete it. There's only 80 marks available in this assessment. It's the least amount of marks you can get in any exam, okay? So this is about 10% of your overall grade. Key things that come up: explaining how an organisation interacts with the relevant government agency, which obviously for us is HMRC, His Majesty's Revenue and Customs. I've finally stopped saying Her Majesty's Revenue and Customs. It's taking a bit of time, but I think we're all getting there slowly, aren't we? Now, again, I'm sure you guys at this point, I am absolutely sure, are well aware of who HMRC is, you know, what their role within sort of finance for us specifically, but just within the wider community as well is. And more specifically for us, we're looking at VAT, aren't we? That's really a big part of this assessment. It's tax processes for business. VAT, value-added tax, as we can sort of also refer to it as, is quite a complex topic. It's examined in multiple different ways. Again, we'll see a variety of different ways throughout this evening and in the remaining revision sessions, okay? A couple of other things on there. It's just that supplementary information, to be fair, like how you interact with HMRC. Best way to do it is get some sort of written confirmation about any issues or doubts. This is just good practice. You can remove the tax element, to be completely honest with you. It's just good practice in business. If it's something important or something that you feel may be useful in the future, you should have it in writing. Verbally is great up until a certain degree, but 6 months later, when everybody's forgotten about it and the issue re-arises, having a written confirmation in your back pocket is very, very handy, especially when it comes to HMRC. Make sure you have it in writing, okay? It says they can also do things like unexpected announcements and visits. They can inspect records. But again, it's not really the avenue that's going to come up. A couple of other bits and bobs. VAT registration requirements. So again, this is reference material stuff, but you need to be aware it is going to come up in some capacity. Your registration threshold, obviously there's the different schemes, isn't there? So for example, we're going to see some of them a little later on, but what are the compulsory thresholds, which once your turnover hits that amount, you have to register. Circumstances where actually it can be voluntary. We're talking about the compulsory threshold. That doesn't mean that a company that earns less than that is unable to register. They can choose to do so voluntarily. It may have its advantages. Circumstances where a deregistration may be appropriate. So again, all this information about thresholds is listed in the reference material. And again, record keeping, how long we should hold on to documentation and what type of documents we need to keep hold of. Equals to those different registration thresholds, etc. You've got your different types of schemes, okay? For example, your annual accounting, cash accounting, flat rate. Now again, the reference material won't tell you in detail what these different schemes are, but again, it will give you the information regarding the different thresholds, registration, deregistration, okay? It will tell you that information. You just need to know roughly what the difference between they are. So for example, for cash accounting, well, I know that the cash accounting scheme is the VAT is, you know, inputs and outputs are dealt with at the time of payment. I know the flat rate scheme is where a flat percentage, depending on the sort of produce or goods that are being sold, is applied. Again, just make sure you have a relative understanding. The amount will be provided in the assessment. And finally, distinguish between different types of taxable supply. So for example, we normally deal with standard, don't we? Like your standard rate is pretty much your bread and butter in the modern sort of business environment, but there are lots of other ones to be aware of as well. Exempt, zero rated, reduced rated, and of course standard, as we've just referred to. Primarily making sure that you're just not getting exempt and zero rated mixed up. A zero rated product or service, whatever it may be, is taxed at 0%. So it's still taxed, it's just at a zero rate. A product that is exempt from VAT is not taxed at all. Again, just make sure you make that distinguishable element. It is a common mistake that people do. Zero rated, you are still taxing it, it's just taxed at 0%. A little bit here, again, as we've sort of touched on, I will say 1,000,001 times in these revision sessions, but it is important. The reference material is your best friend in this assessment. When you're practicing your mocks, have the reference material available. When you're using at the online platform, particularly the Atlas Cloud one that you will use for your exam, use the reference material. Know where it is, know how to access it. It will be there in the live exam. It is your best friend for this unit, okay? It is there for a reason. And for those of you that are sort of perhaps looking bigger picture and looking at level 4, you get reference material for personal tax and business tax as well. So it's not just a one-off, get into the habit of using it now. It will serve you very, very well in the future. And that is it. Now, admittedly, the sort of list of things to be aware of is much bigger for task 1 than task 2 and 3. Okay, so it looks like we've listed off a bucket load of different things there. But again, when we get this task finished and we look at the next couple, you'll see it's not too bad. Okay. Let's have a look at this. So task 1, part A, identify which one of the following statements is correct. So I've got VAT or VAT is a consumer tax that is only applicable to overseas travellers. Okay, I'm going to call that number 1. VAT is a business tax that is part of the business tax system of the UK government. Call that number 2. Number 3, VAT is part of the international tax system and purely relates to imports and exports. And number 4, we'll say that VAT is a tax on consumer spending and provides an important source of revenue for the UK government. Okay, just picked up that comment, Mahmood. Mock tests, I could not go to the reference list. Was that one of the FI ones or the AAT one? If you have an issue with the FI ones, again, you can just get in touch and let us know. You should be able to access it. If it's one, okay, right, that's fine. If you just drop your tutor an email, they will show you how to pick it up, okay? Again, on the AATs one, there is a window that you can access, but they will be able to direct you to where you can access that information. Okay, so I've got a couple of things coming through. Let's have a look. Are we working through examples in our books? So I'm working through mock 1. Again, these are revision sessions. These are not a continuation of the live classes, okay? Again, so these are open to the public. So this is FI mock 1. There might be a slight difference in your materials if you have an older version, but what I will do, I can do it now for what it's worth, is, give me 2 seconds, I will put, okay, found it now, that's fine, but I will also put a copy of this in the chat box for you guys to access. Okay, so just give me 2 seconds and that is uploading now. So again, it will be in the notes. There's been a couple of very slight changes because, as I said, the AAT have just chopped and changed this unit 1,000,001 times. But again, if you check the chat box now, you have got a copy there of the mock that we're going to be using for all of these revision sessions. Okay, so again, you can use that as your reference point. And that's fine, Rob. Again, there might be a slight juggling around because we've had to cannibalize these notes a little bit. Okay, so again, it's there if anybody needs it, but again, we're good to go. So as I'm looking at these, I've got 4 statements, only one is correct. So the best way to do it is to line them all up and knock off the ones that I'm saying, okay, it's not going to be that one. So for example, VAT is a consumer tax that is only applicable to overseas travellers. Well, no, it's not, is it? Straight away, perhaps I'm assuming you're not an overseas traveller. You will have paid VAT before. You will probably work at a company that's located in the UK that pays VAT. It's not anything to do with a consumer tax on overseas travel, is it? Not at all. So this statement, completely off. Number 2, VAT is a business tax that is part of the business tax system of the UK government. Well, it is a tax. It's relevant to the UK government, but it isn't a business tax, is it? That's not correct. If it was a business tax, spoiler alert, we'd probably be dealing with it in the business tax unit, wouldn't we? Business tax is, as the name sort of implies, looking at the taxation of different types of businesses. You're dealing with things like sort of capital gains, a multitude of things like corporation tax. VAT is not part of that. VAT, if anything, is a consumer tax, just not on overseas. Again, we can just start to join some dots here in a minute. Number 3, VAT is part of the international tax system and purely relates to imports and exports. Now, again, that is a half-truth. VAT is part of the international tax system. Well, to a degree, we do deal with imports and exports, as I'm sure you guys are aware of at this stage, but does it purely relate to those things? Well, no. Again, it's a consumer tax, isn't it? It doesn't purely relate to imports and exports. It's not purely based on international trade. So that statement, again, just isn't correct. And this is what you'll want to do in your exam. If you get one like this, just shoot down the incorrect answers and see what you're left with. Even if you've got a couple of options you're not 100% sure on, by removing the ones that you completely know are rubbish, you're giving yourself a better chance of finding that correct answer. So I'm hoping that number 4 is going to be the right one. I've seen a few people in the chat box seem to think it is. So let's have a look. VAT is a tax on consumer spending and provides an important source of revenue for the UK government. Well, yes, it is a consumer tax and it is a very important source of revenue for the government. It fits the bill. We give it a tick. We get the mark. Okay. First one, nice and easy. Let's tick it off. Let's have a look at point B now. Match the following statements with the correct type of supply. Okay. So what have we got here? Let's call number 1. The amount of VAT charged on most taxable products and services. Number 2 will be the amount of VAT charges on, I beg your pardon, let me reread that. The amount of VAT charges on this type of supply is nil. Number 3, these supplies are not chargeable to VAT. And I can see that I've got a pick list of different options that I can choose: exempt, standard, reduced, and 0 rated respectively. Okay, so let's just start chipping through. I can see answers in the chat box, which is great to see. It's good to see people have got the confidence to have a go at this. The first one, number 1, the amount of VAT charged on most taxable products and services. Well, again, that just which shoe fits best. That doesn't really fit the description of an exempt supply. Is that done on most taxable products? No. It's probably a reasonable assumption to say the standard rate is the most common one used, because it is, because that's the clue in the name, isn't it? So for option 1, standard. Number 2, the amount of VAT charges on this type of supply is nil. Now, this is where, again, you have to be careful. It's one of those mistakes that we see where somebody will make it once and then they don't make it again because you're aware of spotting it. I already alluded to this when we were sort of looking at those different types. Make sure you can distinguish the difference between exempt and 0 rated. Now, I see people in the chat box have picked this up and said this is 0 rated. Well, okay, so the question is, how do I know that? What in that description is telling me that it is 0 rated and not exempt? Well, the clue is it's saying that the charge on this is nil. Remember, with a 0 rate, we still tax the product, but it is taxed at 0%. So the VAT charge is subsequently 0%. If it was exempt, it wouldn't be taxed at all. So again, just be wary of those little nuggets of information that will be provided to you in these questions. It's telling me the VAT charge is nil, so it must be taxed at 0%. So it is 0 rated, it's not exempt. Last but not least, number 3, these supplies are not chargeable to VAT. They are not applicable. Probably can guess with this one, can't we? So if it's not applicable to VAT, any VAT rates to the present, 25, 7.5, whatever it may or may not be, doesn't matter. It's exempt, is it? If it doesn't get taxed, it's exempt from tax. And again, well done everybody putting that in the chat box. And we've just got another 3 marks there. Pretty good, pretty good. Again, the only one that might trip you up, just make sure you're comfortable. The differences between 0 and exempt. Look for the little clues that are given in the question, okay? Part C. Mabel is a photographer trading as a sole trader and has been operating a flat rate scheme for her VAT for several years. Which of the following statements is true? So we are using the flat rate scheme. Now, again, the reference material will give you the statistical information on the scheme, like the thresholds for registration and deregistration, who is basically eligible for it, okay? What it will not tell you is a great deal of all the ins and outs of the scheme, okay? You are expected to be comfortable with it. Truthfully, do you need to be an expert? Perhaps not, but you need to be able to say, okay, the flat rate scheme is this, because if I've got a couple of statements here, it's saying which statement is true. Well, if I'm comfortable with the characteristics of the scheme, I should be able to join the dots together here. Now, remember, the flat rate scheme is where, as the name suggests, we just charge a flat percentage. So there's not 20% or 0% or anything like that. We just charge a flat rate percentage of VAT, depending on the type of business that we are. So for a photographer, for example, maybe something like 8%. Again, that is not a specific figure. Please don't quote me on that, but it's just an example, okay? Depending on the type of industry, there will be a flat rate available. So let's have a look at these options. Statement number 1. A flat rate scheme is a complex approach to accounting for VAT and is available to all businesses. Number 2. A flat rate scheme is a simplified approach to accounting for VAT and is only available for very small businesses. 2 sort of diametrically opposed things here, 2 very different statements. It's either very difficult, open to everybody, very simple, not open to everybody. And again, I can see that people have picked up in the model answers that actually the correct statement is number 2. But let's just make sure we are comfortable with knowing why, okay? Again, the idea behind these schemes, the different ones, flat rate, annual, cash, the type of scheme doesn't necessarily matter. The principle as to why those schemes have been created is to make things simpler. Tax is tricky enough as it is. If there is anything HMRC can do to simplify the process and also benefit them in terms of an easier process means it's easier to collect the tax, that's a good thing. So these schemes are easy. If they were more difficult, they wouldn't be enticing for individuals to use. And then equal to that, the other side of the spectrum, available for all businesses, available for very small businesses. Well, it's not available to all businesses, is it? Because again, I've sound like spoiled this one a little bit, talking about the reference material by saying things like the thresholds, so at what point you have to opt out of these schemes. It's not available to all businesses. A business the size of, I don't know, Amazon or McDonald's could not enter this scheme. They are huge businesses. Small businesses are the ones that can join it. Until their turnover hits a certain amount, we'll have a chat about that in a minute. And of course, then they have to leave the scheme. The amounts do vary depending on the scheme, but again, the reference material is there with all those specific figures, okay? Let's continue. So we're actually nearly there. This looks like a really big task. It's actually quite nice, to be honest. It says that Mabel has seen a significant increase in her turnover in recent months and is expected to continue, beg your pardon, this is expected to continue for the foreseeable future. The table's turnover for the period ending March 22 is shown in the following table. I'm assuming that's supposed to say the business's turnover and not the table's turnover. I think somebody's put a bit of a typo in there, haven't they? But you can see here, we've got the period from April 21 to March 22, the taxable turnover in that period, and the cumulative amount, aka what the total turnover is at that point. Now, what I will mention, as I said, this mark is quite nice. It's a bit marshmallowy. Truthfully, I think you'll get a table similar to this, but what you're probably not going to get is this bit here, okay? the AAT, just to sort of make you sweat a little bit more, it's very, very probable, not certain, but it's very likely they will want you to manually find the cumulative turnover, because what we're asked to do is say from the following information, we're going to indicate when Mabel must leave the flat rate scheme, okay? Now, the reason that I think you'll have to work out the cumulative total yourself is if they give you the totals, it's as simple as just checking the reference material. So they will probably get you to try and do a little bit more legwork, okay? But for the purposes of this question, we have that total. So remember, we're in the flat, or on the flat rate scheme, we perhaps should say. Again, just go to the reference material. Everything you need to know. The deregistration threshold. For the flat rate scheme, as Sigmuda has already put, is £230,000. Okay. Again, that figure is shown in the reference material. Now, when we're looking at thresholds, we can do the past to future tests, can't we? We can look at turnover in the last 12 months, I beg your pardon, or we can look at expected turnover in the next 12. Remember, it can work both ways. I will look back at the actual over 12 months, or if within the next 12 months, there is going to be a significant predicted change that will push me over the threshold, I will then have to deregister. So the idea behind that rule is it's HMRC's way of basically getting you booted off these beneficial schemes quicker, and then they can get you on the like your standard schemes, and they can essentially collect more tax, as opposed to waiting. Again, if I know that in 2 months' time I've signed a contract where I'm going to be earning £500,000 a month, instead of doing this accumulative rule and waiting for it to catch up, by using the future test, the HMRC can immediately say, your income's going to go over the limit. We can see it's going to go over the limit. You're off the scheme immediately. So it helps them streamline the tax process. Now, again, in this example, we're doing a past test. So I'm presuming at this point, if we know the turnover in March 23, it doesn't say anything about after March 23. So I can't say in the next 12 months, is my turnover expected to, my cumulative turnover expected to change and go over the threshold? Of course, I'm working backwards. And again, this is why I think you won't get these figures here. I think you'll have to work these out yourself. It's just as simple as adding the figures together. 10, add 15, add 25, etc., etc. Truthfully, people get these wrong because when they're totaling everything up, it's a lot to punch in a calculator, and people just accidentally mashing the incorrect digit. Just be careful of that, okay? Just double check your workings. It's well worth doing. Now, I can see here that if my threshold for deregistry is 230k, at what point does my turnover exceed 230,000? Well, it's in that period, February 22. It's at that point my cumulative taxable turnover has exceeded the threshold. So Feb 22, I'm over the limit. Mabel would have to leave the scheme, okay? Again, not too bad when you get these, but again, I anticipate you'll have to do the workings yourself, okay? Last but not least, for task 1, let's have a look. It says, identify whether the following statements about the annual accounting scheme are true or false. Now, again, this is just why you need to make sure you are vaguely comfortable with the different types of schemes, okay? You aren't going to sort of be writing a great scheme or a great novel about this, but again, you need to be comfortable enough to, if I said to you, what is the annual scheme? Can you roughly tell me? You need to be able to cobble an answer together. And again, you can join the dots in these types of questions, okay? So for the annual scheme, of course, we're talking about essentially submitting VAT returns on an annual basis, clues in the name, rather than on a quarterly basis, which is the traditional method. Beg your pardon. So let's have a look at this. Number 1, this scheme requires a business to submit VAT returns annually rather than quarterly or monthly. Now, I must admit, I've kind of just spoiled this one, but I'm assuming at this point, you guys could have probably gone The annual scheme, I do it annually. It's not a big stretch, is it? So very clear, that's quickly and easily true. Number two, a business must leave the scheme once their turnover in the prior 12 months exceeds 2 million. This is a stereotypical trapdoor AAT style question, because you know that, again, only certain companies, primarily smaller ones, will use this scheme, and they will have to leave at a certain point. You know they'll have to leave when they hit the threshold. So again, that can be a multitude of different things, but it changes from scheme to scheme. You can very easily go, yeah, it's true, because once they hit the threshold, they're gone. Check the reference material. It will tell you, as I can see a couple of people have picked up on, actually, this is false. Yes, you do have to leave the scheme once your turnover in the past 12 months exceeds something, but it's actually 1.6 million, not 2 million, okay? So again, just take 10 seconds in the assessment, check the reference material. It's a really good tip that anyone's like this, where it's saying anything about threshold for registering or deregistering or when things need to be submitted, check the reference material. It is there. Number three, a business operating an annual accounting scheme can also use the cash accounting scheme and the flat rate scheme. Well, that just doesn't make much sense, does it? Even if you aren't an expert on the finer characteristics of these different types, the whole point of this is a simplified process. Is it a simplified process if I'm on the annual scheme and I'm on the cash scheme and I'm on the flat rate scheme? How's that going to work? It doesn't make sense, does it? It's false. Now, for reference, you can use the annual scheme with one of the other ones, but not for both, okay? So you can use a flat rate scheme where you submit annually. Yes, Donna's just put well done, Donna. Or you can use the cash scheme and submit annually. You can't use all of them. It just wouldn't work, does it? Because the whole idea is, again, these are sort of specialized schemes. You would choose the one that is the best fit for you. So again, that statement is just incorrect. And that's it for task one. Again, just a bit of tax knowledge. We've already made good use of that reference material, and spoiler alert, we're going to continue to make very good use of it throughout these sessions, okay? So let's have a look at task two. We're making pretty good time so far. It says task two is about dealing or calculating and accounting for VAT. It's worth 8 marks, again, 10% of the overall grade. It says you have about 9 minutes. Now, you will notice that when you're doing these practice questions, it will say you have approximately this much. The idea behind that is it's a rough guide based proportionately on the amount of marks available compared against the total amount of marks in the exam. Use it as a guide, but please don't take it as a gospel. I've had students that before messaged me saying, well, it said it should take 20 minutes and I took 22. It's like, that's fine. You just yeah, you still get everything done in the exam. You have 5 minutes to spare. You will know your own time management better. There are some things you can probably move through at a quick pace. There are some questions you might take a little longer on. Again, you will know your own work. Use it as a guide, but please don't. If it takes you 15 minutes, it's fine, as long as you're comfortable moving a bit quicker in the areas you're stronger in, okay? Now, the task briefing for this one is much, much smaller. This is honestly the easiest task. We will go through it, but honestly, I could leave this on the screen, go make myself a cup of tea, and when I came back, I have no doubt you would have all got it correct, okay? Really nice, this one. So what do we need to do? We need to work out things like what must be included on different types of business documentation. So how we calculate VAT, understanding output and input tax. Again, at this point, I'm hoping you're aware of the differences. Identifying the impacts of calculations when given information about gross or net, VAT inclusive, VAT exclusive. We'll talk about that in a minute. understanding the impact of discounts on your calculations, understanding what must be presented on invoices, and simplified invoices. Probably the only stick in the mud in this question, okay? And you may be asked to identify tax points too. Now, a couple of things that you can be asked. Again, you might be given the net amount and you have to gross up. You might be given the gross amount and you have to split it into the net and VAT amounts respectively, okay? Let's have a look at what's on here. And it keeps saying, assess smart. Remember about the reference material. You're going to be reciting it in your sleep at this point. Again, our task 2, it's very marshmallow with this one, to be completely honest. It's not too bad. Box Limited is VAT registered and sells a mixture of standard rated, reduced rated, and zero rated supplies. Okay. Complete the table below to show the VAT and net amounts for the following supplies. Round down your answers to the nearest penny. Now, I know for those of you that were in the live classes, rounding in the first sort of session did cause, I beg your pardon, a couple of headaches. The gist is follow the normal rounding rules, which is probably what your calculator is set to, unless you are specifically told otherwise. That is the rule to follow. Normal rules, unless you are told otherwise. If the question wants you to do it a different way, it will tell you. You'll see that in the exam question. So it might ask you to round down to the nearest penny, round down to the nearest whole pound. But again, just follow it, because traditionally, what we do in tax is round to the favour of the taxpayer. But again, just leave all of that. Normal rules apply unless you're told otherwise, okay? It says if your answer is 0, obviously enter it. Let's have a look. Standard rated supply. So what I'm doing here is I've got the gross amounts and I'm working backwards, which again, it would surprise you how many people get this muddled up, because people are so used to saying, okay, I've got the net amount, 20%, that's the total. People are so used to working up to the gross amount, they don't spot it when you're actually working in the opposite direction. I'm going from the gross amount to the net amount now, but the good thing is the calculation is really, really straightforward. Simply going to be our gross amount. Now, again, different ways you can do this. So, for example, for the standard rated supply, I know the standard rate is 20%. So I'm going to divide it by 120. Now, again, different ways you can do it. You can times by 100, and that will give you the net amount. You can times by 20, and obviously for the first one, where it's the standard rate, it'll give me the VAT. But again, if I've got one figure, I can work out the other, can't I? Okay. So as I'm looking at that, 525 divided by that 120, again, times by 100, times by 20. We'll do the VAT one. Times by 20 gives me a total, well done guys, of 87.50. Which means the net amount, the difference between the two, £137.50. Again, be careful. Do not gross it up and say, okay, I'm going to add these two together. It's not what you're doing. Again, you are working out the net from the gross, okay? Let me ask you guys about this one, because this is a bit different, isn't it? What about the reduced rate? Can anybody tell me what they think the VAT or the net amount is for the reduced rate? And bonus points if you can show me your calculations as well, because admittedly I've done it one way. You can move a couple of figures around and you'll still come to the same answer, okay? Remember, I have the gross amount. I need to find the net amount. So just be careful when you're doing your calculations. Good stuff. Again, I see a couple of different ways of doing it, which is fine. And what I will point out as well is in the recording, you will get a transcript of the chat box. So when I'm sort of saying, have a look at this, there will be timestamps on the comments. So you'll be able to cross-reference that to see what people were putting at the time. Okay. So again, a few different ways of doing it. But fundamentally, I can see that people have got to the right point. So Rachel's one is great. For example, 525. Let's do it Rachel's way. Again, there's different ways of doing it, which is fine. If I can't write them all out because it's the laws of mathematics. There's multiple ways to get to the same point. So we can do, for example, as Rachel's done, £525 divided by 1.05, which if we're expressing that as a percentage would be 105. Give me £500 net. I can put that in there. And of course, the difference between the two, my net and my gross, has to be the VAT. £25. Well done, guys. Again, different ways you can calculate it. As long as you produce the same answers, it doesn't matter, okay? Because you're not asked to show workings in these exams. So calculate it in the way you're comfortable. I'm not going to tell you to do it my way. I prefer doing it my way. You will, I'm sure, prefer doing it your way, but we'll both get the same answer. Okay, last but not least, what is the VAT for the bottom one for the zero rated supply? What do we think, guys? Again, let me ask you, keep you guys involved. What can anybody tell me about this one? Yeah, seems a bit too good to be true, doesn't it? But clues in the name, it's zero rated. So it is taxed at 0%. Which means the net is the same, £525. Because there's no tax. It's taxed at 0%. Sounds too good to be true, but you've got a mark for that. You've literally got a mark for typing in 0 in a text box. Not too bad, is it? Helps us along the way really, really nicely. Okay, let's do part B. It's saying, can we identify if the following statements about invoices are true or false? Okay, let's have a look. Statement number 1. For supplies less than £250, inclusive of VAT, you can exclude the customer details. So it sounds like we're talking about simplified invoices here, doesn't it? So again, when it's saying invoices, don't forget it's simplified ones as well. And to be completely honest with you guys, this will probably be what they ask. So when you get questions like this, and they say, we'd like to ask you some questions about invoices, it's probably not going to be normal ones, okay? Because what they're going to really, really want to do is to turn the screw a bit, because you've done simplified invoices a little bit in your reference material, but it's a little less ordinary. It's a little less uncommon, okay? But again, go to the reference material. It literally gives you a list of what should be included, okay? And that, again, I think it's 0.6 or 0.7. I think it's 0.6 on the top of my head. But again, it's got everything on there, like what should it be included, like an invoice number, what should be the total amount. So again, you can just use the reference material and bring that information across. Customer details, as it says, can be excluded. Number 2, on a simplified invoice, it should state the invoice is not a VAT invoice. Okay, is that true or false? Well, it's a simplified invoice, but does that mean that it's not relevant to do with VAT? I don't think that's not the case, is it? It's not the purpose of a simplified invoice. We're not saying that actually, if I make a simplified invoice, I can just completely disregard that. No, that's not the case, is it? It's false. It is still a VAT invoice. So again, that statement, plain and simply, isn't true. There's a couple of like the de minimis that we'll get to in the next task. I don't want to spoil that one just yet, but face value, that isn't correct. Okay. And believe it or not, that's literally it for task 2. So it's very, very small, 8 marks in total. We've saved the best until last. We're probably going to just get to around 7 o'clock-ish. Okay. Task 3 is a little bigger, the biggest one we've seen tonight, in fact. So this, again, truthfully, I think it's quite a nice one. It's about input tax recovery, okay? So very specifically, input tax. So obviously, tax coming in, we offset it against our output. The difference is what we pay. With 12 marks, spend around a quarter of an hour on it. So what do we need to do? Well, we need to understand the implications for input tax for partially exempt registered businesses. Now, again, it sounds like a mouthful, and to be fair, this is one of the areas that wasn't in the previous iteration of this, that was indirect tax. But again, you know, I'm going to say it a million one times, you're going to be sick of me saying it by this time next week. It's all these sort of different like partial exemption rules are provided in the reference material, okay? Understand and illustrate the treatment of blocked input tax, be able to calculate VAT in relation to fuel scale charges, be aware that bad debt relief may be available, and the appropriate accounting treatment. So a couple of biggies on there, okay? For example, like the fuel scale charges, how you deal with bad debts. Now, again, I will point out, you will not get all of these in a single question. As I'm sure you've already probably established at this point, I'm listing all these things off. Then when we come to do these questions, we don't do all of them, okay? So this is why it's important you do as many mock assessments as you can get your hands on, because for this task, for example, spoiler alert, doesn't have anything about scale charges, but the next mock you do, the task 3, very, very possibly will. So again, the more you do, the more exposure you get to these things. We will chat about scale charges in these revision sessions, so don't worry. I can appreciate it's an important topic, so it's not going to be skimmed over in any capacity. But again, just a bit of a heads up, it's not in this task 3, doesn't mean it's not going to come up in other papers. So the more you do, the merrier. And as it says there, oh, guys, did you know that the reference material contains lots of information? Again, it's just there. Everything we need, well, everything, most of the things we need, we can use and reference it there. Now, it does say, to be fair, that it's also important to practice using the scale charge that's included in the reference material. So again, you get a fuel scale charge. Again, it's slightly different than how it used to be. In previous iterations, you'd get your emissions and then a percentage that you charge. Now, obviously, what you've got now is you've got your emissions and then a gross amount based on 12, 6, 3, etc. months. So again, it's almost like prorated. What I will point out now, even though it's not relevant for this task, is because it does come up occasionally. Obviously, you've got the different scale charges depending on the emissions of the vehicle. You round down to the nearest scale level. Okay, so for example, if you have something that is 122, you would round it down to 120. So always round down on the scale charges if you don't get an emissions figure in the question that is directly the same. But again, I'll be honest, the AAT are normally pretty good for this. They will normally give you a figure that is literally as it is on the table, like 120. So you don't need to round anything because it's already on the mark, okay? But just be aware of that. If they do try and catch you out, just round it down. Let's have a look. Stevenson Limited are registered for VAT and have been for many years. Good for them. They make a mixture of both taxable and exempt supplies. Okay, interesting. So what do I need to do here? Well, it says which 2 of the following statements regarding input VAT or input tax are true. Statement number 1 says that any VAT on purchases that is fully attributable to taxable supplies will be fully recoverable. Number 2, any VAT on purchases which are fully attributable to exempt supplies are always irrecoverable. Number 3, any VAT on purchases which cannot be attributed to either taxable or exempt supplies are always irrecoverable. Number 4, any VAT on purchases which are fully attributable to exempt supplies are subject to a review of the de minimis limit to ascertain whether or not they are recoverable. Bit of a nastier question, this one, isn't it? When you've been through this in your course notes, you will sort of recollect there is like a little flow chart that you see for the partial exemption rules. If you use the FI notes, I believe it is around page 99-ish. Again, it might be a couple forward or a couple back, depending on the version of the notes that you use. But the partial exemption rules are on there, and equal to that, there is a little bit about the de minimis rule. And again, spoiler alert, it is also present on the reference material. So again, this might look really confusing at face value, just cross-reference it and it will make a bit more sense. So let's have a look at the number one. Any VAT on purchases which can be fully attributable will be fully recoverable. Well, yeah, it will, because again, if it's taxable supplies, we can recover the tax. That statement just rings true, doesn't it? That, if anything, is input tax at its most basic. The purchase is fully attributable, it's fully taxable, I can reclaim it. That's fine. Number two, any VAT on purchases which are fully attributable to exempt supplies are always irrecoverable. Well, again, at face value, that sounds right, but this is why it's important that you check the reference material, okay? This statement is actually wrong, okay? When we are looking at these different types of exemptions, there is that partial exemption rule, okay? What we're saying here is, again, the de minimis limit. I always sort of say it wrong. It's like the de minimis. I used to get my tongue twisted. When you're teaching at college until 9:30 at night, it's a long slog. So again, the idea is that there is that threshold in place, which is obviously the £625. Again, this is all in the reference material. That rule says actually it could be partially exempt. So to say it's always irrecoverable, not true. So again, those thresholds are in place. We can make that check. Again, we're given no figures in this question, so I don't need to specifically, but it's there if it needs to be. Now, statement number three is saying that any VAT on purchases which cannot be attributable to either taxable or exempt supplies is always irrecoverable. No, that's not true. Again, if you've got the course notes in front of you, when you've got that little flow chart, it says like fully attributable to taxable, unattributable, exempt. If we have something that we can't sort of say is one or the other, what we can do is simply proportion it. That statement is false, because what we will do again is look at this information and say, okay, when we're looking at these purchases, what proportion of it does relate to taxable supplies? What proportion relates to exempt supplies? So again, I could split it as is needed. Again, that little flow chart on page 99-ish shows this. It goes in, I can split it into two, recoverable and irrecoverable, okay? And last but not least, I'm hoping this is correct because I need 2 ticks and I've only got 1 option left. Any VAT on purchases that are fully attributable to exempt supplies are subject to a review of a de minimis limit to ascertain whether they are recoverable. So again, the same point as point 2 here is where that de minimis rule, de minimis limit, call it what you will, is in place to check this information. So yes, because that says it's always irrecoverable. No, it might be subject or fall under the limit and it is recoverable. If it's over the limit and we do the de minimis check and it doesn't meet the criteria, then yes, it becomes irrecoverable. So it's a split of the two. It's not always irrecoverable, but it's not always recoverable, is it? Okay. Let's have a look at the next little bit. Stevenson Limited. I know I said I'd keep you guys posted. We're probably going to be another 10-ish minutes. It's probably going to rattle off to just after 7 o'clock. Okay, so I can appreciate your patience. I know we normally run these for an hour, but I certainly don't want to rush anything. So again, we're probably going to be going for another 10 or 15 minutes. Okay. Stevenson Limited are currently in the process of arranging a business event to thank both their employees and loyal UK customers for their work and support over the last year. They are unsure as to how to account for the VAT of the cost of this event. The business can what? They can either reclaim all the VAT, reclaim none of it, or reclaim a portion of it, okay? So again, this is, I quite like ones like this. I mean, again, tax is a bit like Marmite. Some people love it, some people hate it, okay? Just make sure that, yet again, you are comfortable with knowing what can be recoverable and what isn't, okay? Because when we're looking at these, you are able to proportion this one, okay? Because the rule states that what we can do is I am able to reclaim any amounts on staff, I'm not allowed to reclaim any amounts from customers, okay? Just make sure you're aware of that. Don't remember, Moody, you certainly need not apologise. So again, providing I can proportion this correctly, I can reclaim the costs associated with entertaining the staff. I can not reclaim the amounts relating to customers. What's which? Well, it's a bit of a grey area. You'd be very surprised at these wider parties. I've worked at places before that have been very, beg your pardon, very creative about where the line between a staff cost, a staff entertainment cost, and a customer entertainment cost, where they meet. A bit of a grey area, but hey all, it's not really relevant for what we're doing. Okay, let's keep going. For each of the 3 registered businesses below, identify whether the following input tax can be recovered, is blocked, or is partially blocked. Okay, that's what it's asking. And it's saying calculate the amount that can be recovered. If it can, round your figures down. If the answer is 0, enter 0. Now, this last column, there should be a pound sign here. Okay, so we're going to put those amounts that can be recovered here. I've only got 3 tick boxes, not 4. So 3 different businesses, all that registered, different scenarios of input tax. What can they do? Can they recover it? Is it blocked? Is it partly blocked? Again, the reference material is your best friend here, okay? Lindsay is a self-employed plumber who has recently purchased a commercial vehicle, van, for £36,000, including VAT at the standard rate. What can she do? Can she recover it? Is it blocked? Is it partially blocked? Again, making sure you are comfortable with the little differences, but there's been a bit of a recurring theme as we've been going through this, and that's been around that reference material. Again, just go to the reference material. What can and can't be recovered? Because you can very easily go, oh, vehicles. Actually, yeah, no, I know vehicles can't be, because you can't reclaim input VAT on vehicles if it's purely for business use. You can reclaim on things like vans and lorries. Again, check the reference material. It says VAT can be recovered on commercial vehicles such as vans/lorries. So I can recover this amount. So just be careful of that, and also be careful about hired or leased cars. We can reclaim 50% on hired or leased cars. But again, just check the reference material. It tells you, okay? So I figured that out. I might as well do this bit. Let's just, be consistent and do one line at a time. What input tax can be recovered? So it's £36,000. It's at the standard rate. So what is the VAT that I can reclaim? Well, I've got the gross amount because it's including VAT. 36,000. Again, it's different ways you can do it. Divided by 120. Times by 20, for example. Again, you can do divided by 1.2, or just whatever way you prefer is fine. But I can see that people are getting the answer of £6,000. Fantastic. Next one. David Limited. Very creative names here, aren't they? David Limited is a sole trader who works as a taxi driver. He purchased a car for £24,000, including VAT, at the standard rate. What can he do? Now, again, this is an AAT trapdoor style question, because you see he purchased a car and you go, oh, it's a car. I know all the rules around car. If it's not wholly for business use, he can't reclaim it. It's part, we have to proportion it, etc. The trick is he's working as a taxi driver. Okay. Taxi drivers are able, or if the vehicle is used wholly as a taxi, it can be reclaimed. Okay. So again, you just have to be aware of that. Just little things like that. But again, this is where the reference material really is your best friend. Okay. So it says, again, it's along the lines of like the car uses a taxi, or I think it's like self-hire for like driving instructors. Admittedly, the AAT don't use the example of driving instructors very often, but the input VAT, again, can be recovered. Okay. Let's give that a take. And again, it's just a simple case of working out the amount. Well, same rules apply. I've got the gross amount, £24,000, divided by 120. That's the worst divide sign in the world. Try that again. Times by 20. Again, just different ways you can do it. Work it out in your own way. I'm happy with that. £4,000. Last but not least, Taylor Limited, again, interesting name, leases a car for its CEO. The monthly cost, including VAT at the standard rate, is £600. Well done, Mahmouda. I've sort of spoiled the party with this one, but again, the reference material will give you everything you need to know realistically. We've just said, haven't we, like cars on hire or cars on lease partially are able, because I can claim 50% back. Okay, yeah, well done, Rob. 50% input can be reclaimed. Okay, again, just check how did I remember all this? Check the reference material. Honestly, you'll be gobsmacked in this exam where you can just go, oh, I don't get it. Oh, it's in the reference material. Easy peasy. So now all I need to do is work out what that amount is. Now, again, be careful. I need to work out the VAT amount, but then I also need to work out 50% of that. So I need to do that gross amount of £600 divided by 120 times by 20 as normal, which of course comes to £100. But again, it's restricted. I can only recover half of that input tax. £100. Again, different ways of working out percentages. I'm going to do it times by 50 because it's easy. The amount I can reclaim is £50. Super. Again, not too bad when we get into it. Just be careful of the little tricks. Notice though how the question has to tell you. For example, it has to tell you the car is leased. It has to tell you that the vehicle purchased is a van. It has to tell you it's a taxi driver. It can't just say, person bought car for £10,000. What do I do with it? Again, they will give you the breadcrumbs in the questions, okay? Right, last but not least, the accountant of Hobby Horse Limited, that's a bit more creative, isn't it? I like that one, has carried out a review of aged receivables at the end of the financial year and has identified several bad debts. Hobby Horse Limited does not operate any special schemes and all supplies are standard rated. Okay, last thing we need to do. For each bad debt identified, identify whether they are eligible for bad debt and refiled. I think, again, that's a typo. I'm presuming that should say bad debt relief, or not eligible for bad debt relief. Somebody was clearly having a bad day on the keyboard. I think they were too busy writing out hobby horse by the looks of it. And we also need to calculate the amount of bad debt relief available, round down figures to the nearest penny. If the answer is 0, enter 0. Same rules apply, okay? I've got 2 in total. Number 1, Twinkie Limited has total debts of £2,424, all of which are 7 months old. This debt has been written off in the accounts of Hobby Horse Limited. And number 2, we will do number 1 first, but let me just read the second one out too, just so we can get a bit of context. Threadbare Limited has total debts of £3,456, all of which are 8 months old. A bad debt provision has been made. So let's have a look at this. So for number 1, Twinkie Limited, £2,424. So again, I need to make sure I'm comfortable with the processes and the procedures of when a bad debt can be written off, okay? But you probably know what I'm going to say, don't you? What if I told you that there was a really handy resource that you get in the exam that will tell you the rules for bad debt relief? Shocker alert, in the reference material, I believe it's like point 13, 12-ish, there is the rules on bad debt relief, okay? So you can use the reference material for this. I will quickly go through it for what it is worth. Well, there you go, Rob's even got me there, fantastic. So the rules are: the debt is more than 6 months and less than 4 years and 6 months old. The debt has been written off and transferred to a bad debt account. The debt has not been sold or passed on to like a factoring company or like a debt collection company, which admittedly I've never seen a question where that is the case, but it's in there, so be wary of it. Or the business didn't charge more than the normal selling price, okay? You do not get to use bad debt relief, just as a bit of a side note, if you use the cash accounting scheme, okay? There's a reason it's saying in the question, it doesn't operate any special schemes. Because remember, with the cash accounting scheme, you don't pay the tax or recover the tax until the point of payment. So if I've never been paid from my customer, I've never paid the tax to HMRC, so I can't get relief on something that was never paid for in the first place. So let's look at this first one. Okay, the debts are 7 months old. So it's more than 6 months and less than 4 years and 6 months. The debt's been written off in the accounts. So it's eligible, isn't it? It meets the criteria because it's within the time frame. I've met the relevant requirements in terms of writing it off. So now all I need to do is work out what amount it is. So for Twinkie, total amount, £2,424. Now it says total debts, so I can assume that that is VAT inclusive. So I'm going to do divided by 120 times by 20. Again, different ways you can do it. If you calculate it your own way, that is absolutely fine. But either way, providing you've done it correctly, it comes to the total £404. The amount of bad debt relief available, 404 Great British pounds. Number 2, Threadbare Limited has total debts of £3,456, all of which are 8 months old, and we've made a provision. So let me ask you guys, is this eligible? So again, the debt meets the criteria, a provision has been made. Do you think this is eligible or not? Interesting. So Mahmuda and Donna seem to think no, it isn't. And Donna's touched on a key point here. A bad debt provision has been made. Again, common AAT trap doors. Check the reference material. It will say the bad debt has been written off. Okay, a provision is not writing off a bad debt. We have bad debt provisions. I'm assuming all you guys have done either what was advanced bookkeeping or you've done like FAPS and the new unit. We have a provision for debts we believe we may or may not receive. Again, we have a provision. We haven't written off a specific bad debt. As Rob's just put there, it's a provision. It doesn't mean it's a bad debt. So actually, not eligible because I haven't written it off. Now, what the company could do, Hobby Horse could just put 2 and 2 together and just write the debt off if they believe they're not going to get it and reclaim the VAT. So the amount I can recover is nil. There you go. That's it. And you'll also be pleased to know 10 minutes overdue. Not too bad. Kept me roughly within remit. That brings us to the end of task 3. So what I'm going to do here is just end the recording very quickly.